What's happening, traders? Good morning, good afternoon, good evening from wherever you are. Welcome to this video. And today I'm going to do something different than I usually do. Now, first things first, I have been scalping the E-mini S&P since today's Asian Open. And we can see it 1 minute after 2 a.m. Is when, 2 a.m. is when the Asian session opens here in Europe, in the Netherlands, and been trading since in stages, right? So early Asian session and during the early London session, and I just finished another session scalping the E-mini S&P. And it is at this point 1:40 p.m. or 13:40 hours in European time or military time, I guess you can call it. And yeah, it's been a good day. Been up 12k so far, so very nice. And what I'm going to do now is I am going to switch to the Treasury Bonds. Here we go. And let's take a look at what the bonds are doing now. The reason why I am switching to the Treasury Bonds is, I can do a scalping session or continue my scalping session with the ES. And actually, it is not that volatile, to be honest. Let's have a quick look again. Yeah, I mean, it is pretty doable, right? We have some decent volume coming in. But, I am deliberately switching to the Treasury Bonds because hopefully while trading or at least viewing the bonds, I can do a little bit of commenting on my thought process and go over specifics and or details, and of course everything that is applicable to the Treasury bonds is also or works very well with the E-mini S&P, the ES, right? However, they have different characters, right? I mean, the ES is a total different animal, as they say. But, it is good to take a look at, slower markets, less volatile. And yeah, the Treasury bonds are definitely, less volatile than the E-mini S&P, but also it is more methodological, right? So yeah, let's just go over the T-bills and see what we can do. And perhaps I can scalp a tick here and there as an addition to today's profits, which I made with the E-mini S&P. Now, when we look at the ZB, which is on the left side, and we have the ZN, this one is the 10-year and this one is the 30-year. So they should pretty much be in correlation with each other, but if we look at the volume profile, it has a totally different, setup, I guess you can call it, right? So let's just see then. Now, the reason why I have these two alongside each other is while I focus primarily on the ZB or the 30-year, I keep my eye also on the ZN or 10-year to see if there is indifferences, and you can see that in a blink of an eye the price went up, down, or down, up. I didn't follow it, but perhaps you did. While the ZB is still trading the current bid and ask level. So obviously there was a spread issue here, right? And perhaps, you know, market makers have stepped in to fill those spreads, right? And let's just have yeah. So let's see. Now, these days, obviously, the Treasury bonds are way slower in comparison with, you know, other times, right? When there is news or unemployment reports or, you know, economical driven news events. So yeah, if you are trading the Treasury bonds, it can be extremely boring, but specifically for new order book scalpers or DOM traders, right? It can be beneficial because we can follow basically everything that is happening, right? Now, if we look at what is happening at the current price here at 20, over at the 30-year and the 80 at the 10-year, we see that the sellers are, you know, in comparison with the buyers, the aggressive participants, right? So we see here that the buyers are attacking with 169 contracts, while the sellers attack with 2952 contracts, right? So yeah, it definitely shows us that the sellers are the aggressive participants. However, we see that the sellers do attack, and we also see the bids are refreshing every time. So yes, the sellers are aggressive, but the buyers, at least a participant player, is absorbing the aggressiveness, right, of the sellers. So now eventually they have cleared that level, and the buyers immediately attacked with 378 contracts, counterattacked the sellers, right? So they cleared that level with just 378 contracts, and now we see them also again, you know, reloading their contracts, right? And again, absorbing the attack of the sellers, right? And we also have here a potential, well, breakout from the 30 price level, right? So now the buyers obviously are testing the sellers first, right? They always prefer to test liquidity, right? And that one contract alone, you know, is basically a strategical approach. Why? Because if there is, like, you know, not real sellers here willing to defend that level, as soon as the buyers attack, it, you know, reduces in the number of contracts or, you know, pulling, right? And obviously what we saw earlier here was stacking, right? So the sellers attack aggressively, clear that level, and immediately the buyers start not only attacking but also defending that level by reloading or stacking. And obviously the opposite is, you know, pulling. But so far we don't see any pulling from the sell side, right? So we do see that the attack is getting less aggressive for the time being. right? Another way, excuse me, another way at how I look at the context, right? So we have aggressive sellers, but that does not mean that the price will dip, right? Or, descend, right? Now here we saw sellers who were aggressive. They were, the buyers were absorbing, and now they are basically attacking. And we have here a, break out of the 30 price level based on the volume profile. So, and we see at these previous levels, right? The current level actually 30, but the previous level below that 20. If we look at it horizontally, we see that the buyers are in control of those levels, right? So even though the sellers attack here very aggressively, and we saw absorption, right? This one tells me horizontally, because these numbers in the, buy column, market orders are bigger than the numbers printed here on the sell column, right, on the left. So that tells me that buyers are in control. Potential breakout out of that volume profile level, right? And we see that the buyers here were not only absorbing, but also attacking aggressively, right? So, so far, one could say that, yes, there is a passive participant here absorbing before probably launching a attack, right? Because that's how this game is played. One side is trying to fool or manipulate the other side and try to benefit from their emotional reaction or mistake, right? For example, let's say the buyer here is now deliberately pulling all his, buy contracts at the 80 level so that the sellers can attack. And if, the attack is not as aggressive, he will even pull out most of his or majority of contracts here at the 75 level to see if they will still attack, right? And if not, he will try to test if there are still sellers there. And in this case, only 12 contracts versus, 470, 80, 78, right? So, yeah, there's definitely something interesting going on here. And you see, every time we can see here that the attack is getting weaker. Here, though, we do see that the sellers were able to clear that level here. But we see that the buyers here now, instead of pulling the majority of their contracts, they are reducing it a little bit to, see if sellers will attack and perhaps even induce them in attacking. Because, if we look at it in correlation, again, aggressive attack from the sellers, buyers absorbing, right? Here the same story. Aggressive attack from the sellers, buyers absorbing. And yes, they have cleared this level here at the volume profile, the POC or POC, right, at the 30 level. But now there is no real, follow through of that previous attack, right? So we see here 1,010 contracts, one contract printed in the inside print. We see now that the contracts are stacking. And boom, there you go, right? So let me try to catch a quick one tick scalp here. And here on the right, we also see that horizontally, the buyers are in control because of this number is larger than the market orders of the sellers for this year 85 price level. So I look at it horizontally, and now the vertical or diagonal, right? Aggressive market orders here is also bigger in comparison with what we had here from the sell side. So for example, if we have 10 here and 257, yeah, not only the buyers are aggressive, but they are also controlling the price at this price level, for example 85, because now we have 28 versus, well, now 21, well, 22 versus 640, right? So that tells me that yes, the buyers are in control horizontally and diagonally, right? They are the aggressive participants. So usually that indicates that price wants to tick higher, right? So let's see if that will be the case. Now we see here the tables are turning, right? So and now here the same story, right? And the beauty of the Treasury bonds are, if I'm wrong, I don't have to suffer a very big risk due to the volatility, like for example the E-mini S&P has, right? I can basically get out at the same entry price most of the time, but I will just leave my one tick profit there, because even though we see here that the sellers are in control, and here also, right, we do see some absorption, so the inside print or the market orders are getting bigger, but instead of pulling their contracts, these are stacking, right? And there you go. And after absorbing that aggressive attack from the sellers, now the buyers start attacking, right? So, and now we see here at the current price level, again at the 90 price level, horizontally we have obviously the buyers are in control, and now diagonally they are the aggressive participant as well, right? So these are the signs that I would like to look out for before confirming a optimal entry. And we are at the edge of the volume profile, which aligns with the idea of a potential breakout indeed, right? However, if you have watched my previous price ladder trading strategies or case study videos, like, we have to keep in mind that yes, price may break out here, right? But on the other hand, it may stall. Why? Because if the price was, let's say here, right, at the 65 level, and buyers accumulated a huge amount of contracts here, right? They have lifted the offer all the way up here, and now they know, okay, there will be potential new buyers or new money will be pumped into the market with the intention to hopefully generate that breakout. So they want to, go along for the ride, right? So, and that is the ideal area for those buyers who accumulated, a huge amount of contracts here to exit here, to provide liquidity on the sell side for, the buyers here who are now pumping new money into the market, who want to see that breakout, right? So, and now we see, even though that the buyers are very aggressive, this level stands to hold fast for the time being. So there's definitely some absorption going on. However, an absorption does not always mean that the price will hold and potentially reverse, right? it depends on where it happens based on the volume profile, the context, obviously, right? So what we would like to see then, that the buyers keep attacking and that the sellers are not attacking back, right? So the buyers are basically challenging the sellers. And if the sellers do not attack and the buyers get confident that, okay, and now here, just 20 contracts printed. And that's why the buyers now countered with 413 contracts, right? So yeah, even though there is absorption going on, if the buyers keep attacking, eventually those sellers here, right, they may panic or get scary and think, let's just bail out, right, or puke out, and due to risk management, obviously. So they will then exit their positions, and to place their exit, they have to place it on the buy side, and that will also help to drive or rotate the price higher, right? So yeah, those are definitely the two most important things you have to keep in mind. And we can see here the volume profile thickening, right? So yes, the buyers are aggressive. Yes, the sellers are passively absorbing, right? But if the buyers keep attacking, then yeah, a potential breakout may happen, right? And that now we see that here the number is getting bigger, right? So it may indicate that yes, sellers are attacking, are now the aggressive participants on this price level, 90, right? Versus 77. But again, also it can be the buyer or buyers who accumulated positions here and placing their exits, limit orders here. So those will also be printed out here, right? So it can be the buyer who is exiting either manually by taking market orders every time this level clears, or if it's, suits him, he will place like limit orders there, right? So these are very important areas where a potential breakout may occur, but also it's an area where, buyers may exit their positions. Now we do see that the sellers are attacking, or the buyers are obviously, exiting their positions, right? So let's just go here and take another entry on ZB. By the way, the previous position with, one tick is filled, by the way, here, right? So yeah, and as you can notice, it is way, slower than the E-mini S&P, right? Which is fine. It gives us time to, look at the market in real time and do our analysis, right? Now, horizontally, we see that the buyers are in control of the current price level. And here we see that the sellers are in control, right? But again, this here number may as well be the buyer exiting instead of sellers attacking, right? So should be interesting. Now, if this is a real attack from the sellers, they will, hit the bid, and they will line up here, and there will be contracts be printed here. And as long as that does not happen, then it's probably indeed the buyers who bought lower and exiting their position, right? So, and there are potentially buyers here who want that breakout, who are providing the exit of the buyer here. And again, just, a quick one tick, right? I mean, it is not like the S&P. It has not the speed of the S&P where, 1 in a million. I mean, yes, it can happen. But usually you need a lot of size to move the treasury bonds. And even if you have the size, like we can see here, right? It can be difficult because the liquidity games that are being played, right? And if the price here now ticks higher to 95 on the 10-year, should be very interesting to see what happens with this amount here at the current ask level at 95, right? So we see the bids are deliberately reduced to see if sellers will attack. And as soon as the sellers attacked, right, there was no real follow through. And they don't even print, the contract at 85. So immediately the buyers took, the initiative to trying to control this price level at 90, right? So let's see. And now, things may reverse. So let me exit with one take a loss here. And there you go. All right. So currently back at break even. But that's fine because, the objective here is not to make quick profits like I do on ES. I mean, on ES, the speed, the volatility, it helps, right? Either you get out or you get, filled at your exit, and you can, scalp very quickly. But here, it is a little bit different because of the character or nature of the treasury bonds, right? But again, yes, the E-mini S&P or ES has the speed, the volatility, right? The bonds have, they are a little bit more structural or methodological, right? Now here the sellers have reduced their numbers, obviously, to see if the buyers will attack. So far, let's see what will happen to this number. And as soon as this number changes, what will happen to this number here, right? So we are now back at a 500 and some change, but the buyers are still not attacking. And there you go, right? You see that with a few attacks, immediately they cleared that level, but now they were not able to push it higher, and the sellers reloaded or stacked here. But again, it was successfully cleared with just, a very small amount of contract. Now, unfortunately, that position here did not get filled. So let me try to enter here. Yep, got triggered. Okay. Should be interesting. Now, if this here number is getting bigger than this number, and eventually the buyers will, start stacking positions here before clearing this level, right? It probably motivates, excuse me, then it will probably motivate, other buyers also to jump along. There are currently no buy contracts printed here. So the sellers are dominant at this point. And we see here at the 10-year also that they are protecting somewhat that level. And now the roles change, right? So they attacked and immediately the buyers attack back. And look at that, right? So now, again, we see here a big number. It does not mean per se that sellers were attacking the buyers. It still can be that buyer who has accumulated, hundreds, thousands of contracts here, for example, is, controlling the pace every time, he is stacking his limit orders at the sell side to exit his positions, right? Right, so why didn't I take a market order here? Because I didn't see anything printed in the inside print from the buy side for this price level, right? So that's why I put a limit order here at the 30 level. And if I do get filled, I should be able to, exit with 1 tick loss or accept a 2 tick loss. Depending on, your risk appetite, obviously. But I did not get filled, right? And now we see that the buyers are becoming a little bit more aggressive if we look at it diagonally, right? And now horizontally as well, right? So interesting. And here, let's see what is happening here. Even though horizontally the sellers are dominant, probably there was some absorption there. However, they, from the looks of it, did clear that level, but the buyers are still attacking, right? So perhaps they pulled it deliberately to see if now the sellers do have indeed intentions. And there you go, just 2 contracts printed, testing this level, right? And now 618, but look at this here, guys, right? So, and you see that we immediately have some backticking to the upside, right? And now these numbers here at the bid level are getting bigger, and every time the sellers get, attack that level and the price or the numbers here are getting close to 0, they immediately, reload, right? The contracts. And that can be done deliberately, obviously, right? To create the illusion that there are buyers present here. And probably if that's the case, then it's probably a seller who is doing that, right? To motivate buyers now, to attack. And perhaps that buyer here got rid of all his contracts here, controlling the pace. And now that he is, out of the market, and perhaps he notices that, okay, there is no actual, follow through to the upside. I was the only player who was able to push price higher every time by a tick and controlling the pace. if he knows that, okay, there are no actual sellers here too willing to push the price lower, or even buyers to push it higher, he can now shift the momentum, right? And accumulate a large amount of contracts here before, pushing the price gradually, structurally, and methodologically to the downside, right? So that could be a scenario, but we can clearly see that we have bigger blueprints in the inside print here and also here. So definitely we are currently bullish. Previous position also got filled, right? So we are now up $250 in profit. In about, well, let's say 30 minutes. I mean, it's still not bad, right? But we're at the S&P 500. And then, yeah, it would have been a different story. Okay. Interesting. Yeah, so when I go quiet, guys, it means that I am focusing really hard on the numbers here, the numbers here, right? So horizontally and diagonally in this year DOM, but also obviously in this year DOM, right? To look for those correlations, right? So here we have still that the price is pushing higher. The buyers obviously are the dominant participants, right? Both horizontally, but also vertically, right? And here we do see that, yes, the sellers have printed more contracts on my entry level at 40 than the buyers have attacked the sellers here. But this one on the right, the 10-year, also kind of guides me, right, through the context. So far, I'm pretty confident, and we do see that the buyers now here, right, are printing and now we have also 3 price levels of buyers, but no sellers. And here we are at the edge of the volume profile, and there you go, boom. Right, another tick with 8 contracts, very nice. And look how easy the price came to this year price, where we do have a high volume node after a low volume node, so should be interesting. We do see here continuation of price. The buyers are still controlling horizontally and are aggressive diagonally, right? So let me center the DOMs really quick like that. And now here we do see that change happening, right? Slowly, because the buyers were unable to push through that price level, and now horizontally there are currently no buyers at that level attacking. The sellers previously attacked 125 and now also getting aggressive, right? So what I'm going to do, because if I can catch a entry here for a sell position, and if the price tends to go higher, I'm out with one tick loss, right? Or perhaps even at my entry level. So hopefully this here 60 level could act as my protection point, right? We do see that the buyers on the 10-year are you see that every time the buyers attack, try to lift the offer, we immediately have some backticking, right? So if we have absorption from the sell side with a backticking, right, these buyers here who are attacking may puke out because they realize that they cannot push through and that the sellers are attacking. So they may, close their position. And for that to happen, they either have to click here for a market order on the sell side or place a limit order like that, right, on the sell side. And eventually that could help rotate the price also down, obviously. Okay. You see that here? Let me... Yep. Let's see if the buyers are able... Oh, you saw that very quick drop here? Yeah. Let's get the hell out of Dodge. Now, hopefully I do get filled at my entry price with my exit. So this 500 should not change. But if the price leaves me, then obviously I have to exit manually by taking a market order. Let's see. I mean, I preferably would like to exit at my entry point because that gives me the room to, break even without any loss and hopefully with one tick to the downside profit, right? Because if I still can do it obviously here. Okay, here we go. Let me try to catch a short position here. Yeah. Well, unfortunately, I did not get filled at the 50 level. Oh, this one really breaks down, so I'm glad at least I got out of my previous positions at break even, because, yeah. Didn't suffer any loss there, which is good. Now, this could be a crucial area where either the price may push through the 30 level, and in this case on the 10-year the 90 level, right? And the other scenario, obviously, is that no matter how aggressive the sellers attack the buyers or these bid levels, they will not have any real follow-through, and perhaps the buyers may be able to rotate the price back higher, right? From the looks of it, the buyers do attack. Here, yeah, I'm going to try to catch a buy position here. Let's go for 8 contracts. Okay, this is a little bit troublesome. And obviously we do see some downward pressure now, right, from the sellers. I mean, look at these numbers here on the left, and look at these numbers here on the right, on the inside print. These red and blue colored numbers, right, which represent market orders. So naturally, we have downward momentum, and, you know, looking at the big picture, one could even argue that yes, sellers are in control. But again, looking at the context, right, now the price has reached this level, or at the 30-year, this year price level at 30, with 31,000-ish contracts, right? So if that level stands to hold, then perhaps sellers may exit their positions, and if buyers then see opportunity to benefit from the pullings on the ask, and they all will take market orders, then yes, we can have a very quick drive or rotation to the upside. However, let me adjust these to the 40 level, just, you know, again, one tick. And now something definitely was happening. You saw all these numbers changing like very fast. Okay, here the buyers are still attacking, and they took back control at the 95 level, even though this year 30-year is ticking down, right? And now it is also back ticking, so we have confirmation also that here now the buyers are in control and the aggressive participant, right? So, and here also the aggressive participant and in control, and look at that, boom, how quickly that went up. And that was just enough, you know, to get me out with one tick profit yet again. So far I believe I had just one loss with one tick, one break even, and the rest, I believe 2-3 positions were, you know, profits, right? So far, definitely not a bad session. And looking at the time, we are near the 50 minutes into the session. So yeah, it takes some time, obviously, a bit longer, right? Again, in comparison with the E-mini S&P or ES, speed-wise or volatile-wise, but it also has its benefit, which is more structural and methodological, right? Which can definitely help if you are new to DOM trading or, scalping the order book. Now, let's see if this is a potential spoofer. I mean, I do see here, oh my goodness. Yep, something definitely happened at that point. Let me check if there is any kind of news or anything. Let's see though. Here, today is April 10 and it is 14:30. Oh yeah, definitely. There is the Canadian unemployment rate. Let's see here. Yeah, 14:30, right? And there is the CPI. Okay. So yeah, definitely something going on news-wise. So that could be the reason indeed. While the market had a quick jump start, so to say. It just became alive. Now let's see though if we can benefit from this opportunity as well. Yeah, oh, what the hell? I just made a small mistake, guys. Go on now. Yes, here we go. Thank God. Now, that's also a benefit, I guess, of the Treasury bonds, right? So luckily I got out at, again, my entry point with break even. So no loss whatsoever, but also no profits. And that's fine. I mean, it's nice to not always get punished for a misjudgment. Having the opportunity to, recognize that miscalculation and having the time, to be able to react is definitely nice, which we don't have as much at the ES, right? Which can be very punishing if you make a small miscalculation. Here we are trading at the pressure point, which also happens to here at the 50 level. Just a emergency stop loss there. Now obviously if I have all the signals to manually get out, then I will utilize that instead of, just accepting a 2-tick loss by shifting my stop loss, obviously, but now this is a scenario I entered a bit aggressive, right? Because now basically I have to accept a 1, 2, 3 tick stop loss. I mean, yeah, the price can come back to this here pressure point, which sits at 50, and the 60 level could act as my, protection point. Let's enter the DOMs really quick. Yep. Got out with 1 tick profit. Unfortunately, the price did not follow through as I hoped it will be. It may now, obviously, right? And in the meantime, I have reached the 1500 profit level. Which is a nice time, and we are also almost 1 hour into the session, so it's a nice time to end this session as well. So yeah, I hope this video in any way has given you guys some value when it comes to analyzing volume and basically trading on intent without having any predictions whatsoever. This is not random clicking, this is just reacting to market participants, how they interact with each other. Not only how they interact, but also how liquidity games are played, right? But yeah, let's end the video here, guys. I hope you enjoyed watching the video, and I will catch you guys in the next one. I wish everyone a blessed weekend in advance with their families and loved ones. So stay safe and see you guys soon.